Well, welcome, ladies and gentlemen. This is your host, Robert Roy. I hope you're all having a fantastic day today. Let's go ahead and make sure you all can hear me. If you would please go ahead and type the number 1 in the questions box to let me know that you can, I would greatly appreciate it. Jeff, good to see you, sir. How are you? Good evening, John. Thank you. John says good evening to everybody. Oh, I'm glad to hear that, Jeff. Fantastic. All right, so let me go ahead and bring up our disclaimer. Let's get that thing taken care of right away. It basically says that I, me, Rob, am not an advisor and cannot legally tell you to buy or sell a stock. It's just against the law. The SEC, which the Securities and Exchange Commission, they're required to be licensed in order to do so. I am not, and I do not want to be. So if you find a candidate, an indicator, a trade setup, something, anything that you like here today, my suggestion is you paper trade it first before ever putting 1 penny of real money into the trade setup or indicator, and then and only then would you do so if it fits your own personal risk profile and risk tolerance. Now, keep something in mind. Because I am not an advisor, that means I am not under trading restrictions, which means I will possibly be in a trade without any prior given notice. All right, let's go ahead and get right through that. Joan, I'm going to post the one from tonight instead. It's really fairly close. All right, so how accurate is accurate? So it's question time. And guys, a lot of the questions I will ask you tonight will be 1 for yes, 2 for no. There will be an occasion I'll ask you to type something in, but I'm going to try to keep it as simple as possible for you. So what is the accuracy of your trading, right? Think about it. You know, how accurate are you with your trading? Have you given it any thought? Right? Have you really stepped back and looked at your trading results and said, okay, this is what I'm doing, this is what my numbers are, right? And if so, what have you come up with? You know, are you happy with the results that you're getting there? Are you seeing some improvement taking place? Basically, what have you come up with as you've done the analysis on your trades? And hopefully each and every week you are going back and analyzing your trades, whether they are non-funded or funded trades, doesn't matter. They should be analyzed because every trade is a real trade, regardless of being paper or not. So there are 4 levels of trader. I want to talk the first one about archery. Right? We'll use that one as our example. Right? And the first type of trader is dangerous to themselves. This guy just took an arrow that was curved, almost like a boomerang, shot it straight in front of him, and it came right back and caught him in his tail end. Right? They're dangerous. This type of trader is dangerous to themselves. Now, for many newer traders, that's exactly where they wind up. Right? That's exactly where they wind up being as a newer trader. And it's normal. It's not that you're in a bad place. The second is close but no cigar. Yeah, you're getting close to the target, but you're really not hitting it. Still said I'm good with the where, but less accurate with the how. It does end up where I think, and more often than not. Okay? And then the third is getting better but still not hitting the mark. You're getting in there, but you're just not quite nailing it yet. And then the fourth one is that seasoned expert. Man, you're spot on. You're not hitting on every trade. You'll notice there are a couple of these that, you know, on the red out here, and that one is on the blue and red edge there. And you're not perfect on all of them, but you know what? You're doing pretty darn good with your accuracy of the trade. Right now, of the 4 levels of traders, which one do you tend to fall into? Right now, I realize that there may be some gradations of it. You may fall between 2 of them and not be predicated to one type or one particular one, but I also didn't want to make up 85 different trading examples there of where you might be. What have you been doing to improve your position? Because if it's the same thing you've been doing, expecting those different results, we all know that doesn't work, especially in the stock market. So what have you been doing to improve your position? Are there exercises you're going through? Are there trainings that you're taking? Are you working with a mentor? You know, what types of indicators are you using? All of these could play into that answer. Have you come up with a plan to move forward from where you are now towards that seasoned expert? Because every one of us, even if your goal is not to get out of the rat race and retire and not have to go back to work, you all should be striving to be the best trader you possibly can be. And every one of you can become that professional trader. It's just it's getting over that hump. It's getting through that crisp edge on your trading. So of the 4 categories, which one do you fall into? And you don't need to type it in, right? But just you look at it, guys, and again, there may be some gradation in between there. You may be part of the improving butt and close but no cigar, right? Or improving butt and seasoned trader. You're close in there, but you're not quite there. But who are you? And guys, I made funny names up for him, Mr. Dangerous, Close But No Cigar. I think you get what I'm talking about, right? The overall goal here is to analyze where you are in your trading now and what does it take to get you to the level that you want to be at. All right, so let's talk about the trader's DNA, and we'll go to Mr. Dangerous, right? And this, by the way, really came from Mr. Wonderful on Shark Tank, right? I just called him Mr. Dangerous. But he can or has the potential to harm his family's finances. That type of trader needs very specific direction on the how to and what to do. They feel like they're never going to get this, and they're probably using 1 or 2 indicators in their trading decision, right? That's Mr. Dangerous. Close But No Cigar, they put some time in to learn this. They created a system that they think is on the right track, but they feel it still needs more work. They believe if they had more money, it would be easier, which is not the case. The more money you have, the more money you can lose. I'd rather see you start with a smaller account and blow up a $2,000 account than a $20,000 account. They've tweaked a few of the indicators and they see better results, but usually at this point, they're using too many indicators. The average trader will start off with 1 or 2 indicators to get started. A couple of months, they start moving up because they feel 1 or 2 wasn't enough, and they start adding them, and all of a sudden there's 8 and 10 technical indicators they're using. And I love when I get a trader that shows me that they use, as an example, MACD, stochastics, and RSI. They're all similar indicators, not exact, similar. They're all oscillators. They oscillate between X and Y, but they're getting contrarian signals and still trying to take the trade there, right? Usually they're using too many indicators at this point, and that's a huge part of it for this type of trader. But it's a transition, guys. That's just the way it works. That's how it is for most traders, is they move through these phases. Improving but, they've added some indicators to their system. The accuracy has picked up, but something is still missing. They're adding more indicators. They're changing indicators. They're looking for the holy grail. They're always looking for that bigger, better deal. Oh, that indicator, you know, the one the guy used the other day where it's got 7 different versions of RSI built inside. Yeah, that's great and fine and good. And guys, I can make up 100 indicators in 100 hours. No question I could do it. That doesn't mean that they work, right? And many times they work for a limited period of time as someone is creating these until the market really takes a slight shift, and then the indicator doesn't work any longer. You really need something that has been time tested, used over and over again for years, preferably decades in the market. Now the seasoned trader, it seems like they've got it all together. They make it look easy, right? They're not using a whole lot of indicators. Many of them are using what are known as harmonic indicators in their trading. I personally, Rob, I am a harmonic trader. I trade with nature. I'm in tune with nature with my trading. I am trading very heavily off of human emotion. Let me ask you a question, 1 for yes, 2 for no. Do you believe that the market is chaotic or can be chaotic? 1 for yes, 2 for no. Okay? Getting lots of ones popping up in there. All right? And guys, I understand where you're coming from with it. I agree with you. It can be chaotic. But what if I told you that most of that chaos was planned chaos? Very little of it is chaos that just happened. Wait, what do you mean, Rob? If earnings comes out on Apple and they drop the ball and the market starts falling apart, that's planned? No, that type of earnings announcement is not planned. An attack, heavens forbid, on the U.S. or another country, that's not planned chaos for us. But when the market starts to shift and all of a sudden takes these wicked whipsaws and you have no idea why it shifted in the middle of nowhere, most of that is planned out by professional traders, others that use similar systems to me to analyze the market and take entry points where everybody else is selling and getting out of their positions. Usually, guys, if you looked at a, let me see if I can open up Paint here real quick. If you looked at a trade, right, and you decide you want to get into a trade, let me grab a pencil here. All right, so you decide you want to get into a trade, and you're waiting. And what are you waiting for? You're waiting for a certain indicator. You're waiting for a Bollinger Band. You're waiting for a moving average. You're waiting for a MACD, whatever it is. So here's the MACD line, right? That's supposed to be a horizontal line, right? I did not do a very good job of that. So let's do this. All right, that's better. That's much closer to being almost straight now. So we'll take this, and you're waiting for the MACD, right? So you're waiting for the MACD to cross up, right, as an example, and you're waiting. Well, what's happening is as you're waiting, the stock is making its move, and the stock has been moving now. And it's kind of doing this, and it gets to about here, and that right there is MACD or whatever other indicator gives you your signal. That's your entry. That's the average trader. For the first three trader types that I gave you, that is the entry point. The thing about it is this. Usually, I am entering back here somewhere, and right about here is Rob's exit, R for Rob, right? R-E, Rob's exit is right about there. I am usually the one selling to the non-harmonic trader. I tend to trade off of human emotion, off of that planned chaos. I am not moving the market. I can look at charts and have an understanding of how and when the market is expected to move. Now, is some of that because I've been doing this for so long, I have instinctively determined how? Yes, that's part of it, but that's part of trading experience. Whether you are good at MACD or other indicators or harmonic indicators, it doesn't matter. The whole key is to be able to identify what works in the market, and I need you to have that slight edge. Write that down. I need you to have the slight edge. Great book, by the way. I need you to have that slight edge on your competitor, on your competition. What do you mean, Steele? I want to download like in the... Oh, I gotcha. Like in the Matrix. I thought you wanted a download of a Matrix. That's what I was a little lost with. Yeah, I hear you. You know, Steele, I wish I could just plug my brain into a computer and say, here. Right? Here it is. But, you know, if you think there's a, I don't remember the name of the movie, maybe you guys do, where Adam Sandler, I think he was the one that was in it, but I could be wrong. But anyway, he had a remote control and he could, you know, go through time faster. You know, oh yeah, there's no sense in worrying about that. Let's skip that. Click. Thank you, Steele. Right? And that's kind of the same thing with the Matrix is, you know, all of a sudden he passes by all this time and then he wakes up one day and he's very old. And he missed so much in life because that wasn't important and he just clicked through it, right? The pieces of learning how to be a good trader are important. And as much as having that download would be awesome for you, I think it would also be a disservice for you to some extent as well, because I really do want you to learn how to do this on your own. And part of that is me as the educator just not wanting to give in and say, here's all the answers. Because, guys, if that's the case, then I'm just going to tell you, give me all your money and let me trade for you, which obviously I'm not doing. I made that clear in the beginning of the testimonial, of the disclaimer, rather. I want you to learn how to do it. What happens if next month I decide to retire? What happens if next month I don't trade any longer? Something happens, right? I'm going to die in another 100 years or so from now. Then what will you do, right? I mean, I need you to learn how to do this, and I need you to learn how to do it right. And I'm fortunate because the harmonic indicators that I'm going to talk to you about tonight, I learned them from an expert. My mentor was just that. The guy was an absolute flipping guru when it came to this stuff. And I was so blessed, even though he was only here for a short time on this earth, I was so blessed to be able to capitalize on the knowledge that this gentleman had to me. And I love being able to give it back because of what Vaskin did for me. And one of the things he did was make me promise to do just that. And I've honored his name. In his name, I've honored that for years. So let's talk about harmonic traders. What is a harmonic trader? Harmonic trading is a methodology that utilizes the recognition of specific price patterns and the alignment of exact Fibonacci ratios to determine highly probable reversal points in the financial markets. Guys, what that says is it is an indicator that is freaking awesome. Right? When you start seeing high probability reversal points in the financial markets, what else could you ask for but high probability? And it's a reversal. Continuation is usually a little more of an issue for traders. So tougher to trade on those continuation setups where the retracements or the bounces, the reversal points become an easier trade. The methodology assumes that patterns or cycles, like so many other patterns in life, guys, repeat themselves. The key to it is really this. You've got to be able to identify the pattern, know where to enter and exit it upon a high degree of probability that the same historic price action will occur again and again and again and again. Although the patterns aren't 100% accurate, if the setups are identified correctly, it is possible to identify significant opportunities with limited risk. I don't know about you, but when Vaskin first showed me that sentence, excited was an understatement. You mean that I can have the opportunity to have significant profit potential and have a limited risk and do so with high probability setups that repeat themselves again and again and again? And his answer was yes, as not my answer is to you. Guys, not only have I learned them, but the student became the master. I've also developed trade setups as well, advanced Fibonacci techniques that I have come up with, things that others have not been able to see. You know, I'll give you an example. I teach something called Fibits, which is a Fibonacci pivot. There's nothing out there in the market about it. You won't find it anywhere unless somebody stole it. It is copy protected. It is my intellectual property. I developed it. Right, but I have taken it to that next level by being able to develop new systems around what I have learned. For right now, I don't want you worrying about developing a new system. I want you worrying about how do I just hit enter and get in and out of this trade. I mean, let me ask you, would you guys like to see one from today? If I could find one from today, if there was a fib setup that worked today on an intraday basis, would that be something that would interest you guys? Okay, Christopher, that was almost like duh, you know. Yeah. Okay, all right. So I think I've got one that will work that I'll share with you guys before we're done here tonight. From today, guys, we're talking about real time in the market, options pricing, where I got in, where I got out, drawn right on the chart for you. All right, so let's go. So time to talk about Fibonacci's, which are also called fibs. You'll hear me mention that all the time. Fibonacci's present themselves in nearly every part of our daily lives. Let's take a look at some areas that you may know them from. This is your DNA. Now, it may not actually be your DNA, but it's a picture of DNA. And there is a major and a minor helix in your DNA, which have a perfect 0.618 to 1.618 relationship. I want you to write something down right now. I want you to write down 0.618, and I want you to write down equals the most important number in the universe. It is not your IQ. It is not the number of tickets you have on your driver's license. It is not your cholesterol level. It is Fibonacci. Right? Fibonacci number, that 0.618, it's called the golden ratio. Divine proportion golden mean. It is the essence of life when you look into that number. There are Fibonacci masks that you can use on a computer where you align your face in the camera and it shows you the dimensions between your eyes to your nose to your mouth, the center of your ears to the distance of your ears rather to the center of your nose, the height of your head to your eyes, nose, and mouth, and you know all of that. And you know we did this. I had access to one of these. They're not cheap programs. They're probably a lot less expensive today, but they're not cheap programs. And I had access to one at one time, and took my wife and she put her face in there. Pretty good. I mean, her alignment was pretty good. And then she said, "Okay, your turn." And I said, "Oh no, you ain't getting me to put my face in that thing. I got enough issues thinking about myself that I do not need to have that in there of how my face might be off." Right. So here you have Jessica Simpson. Right. Not quite perfect. If you look at her lips as an example. Right? They're a little bit further out than what would be perfect lips. Her eyes are off just a little bit. Whether you like her as an actress or not doesn't really matter, right? Her face, she has near perfect facial features, right? George Clooney, near perfect facial features. I do like him as an actor until he played in that Dumb Goats movie. I kind of lost respect for him at that point. But again, doesn't really matter, right? From a facial features, he's got it. The foot, if anybody is into any kind of natural health, right? Your foot is the gateway to the entire human body, right? But the shape of your foot is a Fibonacci level. Architecture is designed and developed utilizing Fibonacci. You know, guys, I have two major hobbies in life. Well, three, I guess, but gardening and fishing are my summer thing, right? In the winter, when it's too cold for that, I do woodworking. I've got a full-blown shop in my basement. I have 3 wood lathes down the basement that I own. And I love turning wooden bowls. Actually, we don't call them bowls. We call them vessels. A wooden bowl is, you know, $10. A vessel is $500, right? So they're vessels, right, that I turn. And the very first bowl I ever made, right, didn't do vessels at that time. I made it, and I brought it up. I was so excited. Honey, look what I made for you. And she looks at it, and it's in her hands. She's like, oh, that's nice. Thank you. And I said, wait, you know, you don't have to put that up here if you don't want. She goes, maybe we can leave it on the counter in the basement. I'm like, wait a second, what happened? She said, something's just not right about it. And I learned that there's something called a Fibonacci gauge that is used in architecture, woodworking, things like that. And I have that gauge, and I'm able to build more likability into the pieces that I make, right? Then you've got things like sunflowers, right? A conch shell, seashells. The human ear, that's a Fibonacci circle. All of this, Fibonacci's. We see them everywhere. Music, math, art. The Mona Lisa is, I mean, it's the Leaning Tower of Pisa. All of it. Right, so I want you to tell me, where in nature does MACD show up? I can't think of anywhere. How about moving averages? Guys, I love moving averages. I use them all the time, but they don't show up anywhere in nature, right? Anywhere in our lives, they don't. Stochastics, RSI, nope. Volume, not at all, guys. None of these show up anywhere in nature. If Fibonacci are so important and so key and so critical in so many areas of our lives, why would we not make it important in our trading? I do not believe anybody should be trading without the use of Fibonacci's. And it's funny. Fibonacci's are a series of retracement levels, and I'll show you that on a chart in just a few moments. They're a series of retracement levels. And I've had professional traders tell me that Fibonacci's don't work without any clue of how to use them or not. You know, that's like turning around to John Bollinger and saying Bollinger Bands don't work. Well, they're what made him successful. How in the world can you say that? You may not have figured out how to use it. RSI is a great example. Guys, I have a friend of mine that he kills it with RSI as his only indicator. I can't use it to save my life. It's a terrible indicator for me. It doesn't work for me. It doesn't fit my risk profile. So what are fibs and how do they work? Guys, when you look at so many things, the pyramids, the Da Vinci's Madonna and Child, the Pantheon, the solar system, all of these have one thing in common, guys, just one primary thing in common. It's the golden section, or that divine proportion, that 0.618 that I asked you to write down before, is the most important number in the world. So Maxime, I'm not sure what 42 represented. Maxime had said that that they thought 42 was the most important number. Not sure where 42 comes from there. But Leonardo da Pisa, who renamed himself Leonardo Fibonacci, he did not develop Fibonacci. We can find Fibonacci back to the 500 BC, right? At 400 and something BC, 450, 480. Oh, okay. So Leonardo da Pisa, 13th century mathematician, had the most significant findings, and it was what was called in Fibonacci's, it was called the rabbit counting exercise. You may remember this back from grade school. 2 rabbits become 3, become 5, become 8, become 13, 21, 34, 55, 89, ... Okay? And that all starts off with the Fibonacci number series. That number series right there is the strength, the heart of what Fibonacci's works off of. And this was where Leonardo Pisano, right? Leonardo from Pisa, again, changed his name to Leonardo Fibonacci. This is where he shined when it came to Fibonacci. He had a tremendous contribution to Fibonacci's there. Now, even though this sequence of numbers will forever be known as the Fibonacci numbers, it's not the numbers themselves that are important. It's the relationship between them that matters. And there's so much mathematical stuff happening in the background there that you don't see, you don't know, you don't understand is there, but it's critical to the success of the indicators. So what we've got here is, I'm going to just grab a highlight marker, is here we had a stock make a move down and get to a bottom and kind of give us a bounce there, a little V bottom. I think most of you know what a V bottom is. Anybody that is unfamiliar with a V bottom, give me a number 2 in the questions box, and I'll spend a moment on it, but I think most of you would understand what that is, right in there. Okay, Christina, so, oh, okay, all right, so no, maybe you don't, and let me take a few minutes to go over that. So guys, what's happening is when you look, so look right here. Do you see a V shape here? I see it's coming down, but there's no bottom and bounce there. When you look right here, I've got this long wick down and this bounce up. It came down like a V shape, right? So what I was referring to then is on the left-hand side, and I'll redraw them again. I just wanted to clear the screen there. On the left-hand side, we made a move down, we bottomed out, and we bounced back up. It was not this very slow grind, rounding type bottom. It can do that, but the best fib patterns will always have a sharp change in direction, known as that V bottom. So those of you that put in a 2, just give me a 1 if that makes sense. Give me another 2 if it doesn't. You are welcome. Perfect. All right, great. Thank you, folks. So there's the V bottom. And then what happens is the stock continues. And it's I'm looking for a straight move. Don't steal my thunder, Steele. Don't do it. I'm not going to repeat your comment there yet because you're going to steal my thunder. Oops, sorry, I did not mean to draw that down. I was watching Steele's comment there to see what was being written. So guys, we make that move up, and then there's that V top. So what I am looking for, here's the way I want you to write this down. When we identify Fibonacci's, here's the exact words I want you to use. Don't change anything. I'll say it 2 or 3 times. But we're looking for the largest directional move closest to the right side of the chart. I'll repeat it. The largest directional move closest to the right side of the chart. One more time. I want the largest directional move closest to the right side of the chart. When we look at this, V bottom, there's the directional move and the V top. Right? What I'm not looking for is this. In an ideal world, that's not what I'm seeing. Because each one of these gives me a new V bottom and a new V top. V bottom, V top, V bottom, you get the point, right? I'm looking for more of that straightforward directional move, not the change. And what happens is all I am going to draw here is the blue line where I put the S for start and the blue line where I put the F for finish. Every other line will be drawn automatically. I will show you in just a moment what I mean by that. But here's the key thing to understand about these other lines. All I did was wait after I got the V bottom and I finally was able to identify the V top and see that change, and I drew the fibs. Now all of these red lines, 1, 2, 3, 4 red lines and 1 purple line, take a wild guess what that purple line's number is valued at. I don't mean the dollar amount, I mean the decimal value, which, hint, hint, I already gave it to you. Right? Those 5 lines are drawn automatically. I don't have to do anything to them. But they are all support and resistance areas. Now, if we go ahead and identify this, watch, we'll walk through the example right here. So you can't identify anything on support and resistance prior to that. It doesn't count because we didn't draw it yet. So we came down, and this first line we hesitate at. We came back again, right? So this was support right here. and then as the stock comes back up and hits it, it's now resistance, right? It's support here, and as the stock pushes back up, it becomes resistance, right? So if you look, here's support, here's resistance. We hung around this line 5 days. We came back almost perfectly here again, right? We came right down to this line. Now, it doesn't mean it hits it perfectly every time. That's not what support or resistance are. Find me a channeling stock that's moving in a sideways pattern that always hits support and only support, doesn't go through it, and it only hits resistance and never goes through it. It doesn't happen. You're getting close, you go through it a little bit, you're trying to identify an overall pattern. Joan said, when do you know that it's time to redraw the fibs? Give me a few minutes, Joan. Ask the question in a little bit again if I don't cover it. But let's get into the actual charts. I'm going to go into Trade Navigator first, and we'll look at it in there as we get into a little bit more of it. You're quite welcome, Joan. Right? So here's another pattern, guys. And I want you to tell me between the blue lines, and what I mean by that is from this point to this point. So don't worry about anything that's prior to this. Forget about all of this back here. It doesn't mean a thing, right? Inside of that yellow line there, do you notice a letter presenting itself in there? A letter of the alphabet presenting itself. Okay, Maxime, I set myself up good for that. You said the V. And you're right, you've got those V patterns. Good answer. Other than those V patterns, do you see another letter in there? Right, okay, some of you are getting it. And if you're not, that's okay. If you haven't been taught this, I wouldn't expect you to know it. Guys, there are not people teaching this out there. It's just not happening. I own almost every single Fibonacci book, video series, and CDs, all that kind of stuff on this. Trainings, and I can tell you without any hesitation, most of them are garbage. I bought a $60 book on Fibonacci's. I was so excited, and page 2 of the book said, we will not be teaching you our proprietary Fibonacci trade setups. Instead, we're going to talk about the pyramid. I'm like, what? Okay, so you guys, those of you that answered it got it, and it was an H. And Joan said the H, but it took a long time to recognize over and over again. And I get that, Joan. The most important thing, because you and I have known each other for a while, the most important thing is that you stuck with it and you can now see it. This is if you've ever watched, oh, I can't remember the name of the Christmas movie now, when they go up to the North Pole. Tom Hanks is the conductor, right? Well, as they're, the little boy gets this bell, and it's the Christmas bell, and he can't hear it. When Santa shakes it, he can't hear it, and that's because he doesn't believe. Polar Express, thank you. So many of you are so helpful. Thank you so much. Polar Express, and he shakes the bell, and he's like, I want to hear it. I believe, right? You really have to spend some time to get this, guys. But once you believe, right, like that little boy with that bell, you'll never stop seeing it again. I'm going to draw it out for you, right? I know most of you are looking at it that are unfamiliar and saying, wait, Rob, this is a small h, a lowercase h. I don't see it. Well, it's right here. Comes down, up. Right, now that's a decent one because many of them are going to look like this, where it's not a very pretty picture for some. To me, it's the most gorgeous thing in the world. It's not only is it the prettiest letter in the alphabet, it's the most profitable. What if I told you that I can define for you its move off of, come on, give me that pen back, off of these two lines? I can define for you a move, and I can tell you whichever line it moves off of, and I'm just going to draw it off of one so we don't confuse the scenario there. If I can capture the move off of this line, I know that I can get a move expected down to this line, and that move right there will encompass about 96, 97% of the entire run of the stock will go just those two lines. That doesn't mean it always stops there. You will see on this scenario it went much further than that. And guys, on this trade setup that we identified, it brought in $1.10 on that pattern, on our options trade. Now, you may look at that and say, Rob, that's not worth it to me. I don't get out of bed for $1.10. Remember, that's a per share price, right? So if you did one contract, that's $110. If you did 10 contracts, that's $1,100. I'm going to say no matter how you slice it, it's not a bad trade setup, considering you put maybe $4 or $5 into this trade. So let's say you put $5 and you only made $1. You got a 20% rate of return in just a couple of days. Pretty good rate of return, pretty good setup in there for you, right? Here's an intraday chart. I get asked the question all the time, can you trade this intraday? You can. I like to do it on higher price stocks just because of the movement, right? But if you look right here, we had this nice move up, right, from the bottom of, actually no, we did this one from the top down. Let me get the drawing tool so you can see it. Here's the V-top, right? We had it drawn on the bottom. I remember this trade. We had it drawn on the from the bottom up, and then it changed. So we had this move down, and look at the move up, right, guys? Here you go. There's the line down. Here's the H1, 2. Ooh, we got 3 lines out of that one. Awesome. Again, you may say, Rob, that's an ugly letter. It might be to some. That's okay. It was $1.80 per share, or $1,800. I will take $1,800 ugly any day, any single day. Here's another intraday setup, guys. And you can see we moved from the bottom here right about 9:35. We moved up to the top at about 10-ish, 10:05 maybe, whatever it was there. We pulled back. Let me get the pencil, the marker, and draw it. It's just easier to see it. All right, so there's the move, but oh, wait a second. This one was an upside down H. Ah, yes, you can trade these bullish and or bearish. So guys, that was $1 per share profit. And I know some of you are looking at this saying, wait, Rob, when it broke out of the top here, your system doesn't work very well because you made, you made it up to 495 or so, and then that's it. But it ran up to 508. I mean, that's $13 that you missed out on. Well, the advanced technique on 10 contracts would have netted us 2,600, not 1,000. There's an advanced Fibonacci technique, and I'll allude to it a little bit today when I show you the intraday trade setup that I did today, right? It's a system that I developed a very long time ago and has been now tested and traded by tens of thousands of traders. Here's another example, right? Look what happens here. We made this move down, top to bottom. We came up, and if you look at the purple line, there should be a hotkey for this pen. Look at the purple line. We moved 1, 2 lines, and then we bounced. As I told you, 2 lines is pretty much a standard. That was $4.50 a share on that position, guys. $4.50. I don't know about you, but I think that's a pretty darn good profit on a $45 stock. And there have been multiple other setups on here that have presented themselves. There have been there's Fibonacci 4 steps, there's zero line breakouts. There are other trade setups that are on this page. That was just one setup in there. All right, guys, if you took the last 4 trades we did, right, the ones that I just showed you, $1,100, $1,800, so $1,100, $1,800, $2,600, and $4,500. That's good. They all end in zeros. 11, 12, 20, right down to 0, carry the 2, 4, 6, 8, 10. That's $10,000 just on those 4 positions, guys. It's $840 if you only did 1 contract. I'm counting it as 10, which is where I tend to like on the 10 numbers. But let's go ahead and take a look at intraday. Let me see. Not intraday, sorry, end of day, and I'm just going to make sure that I have nothing drawn on Microsoft. I'm going over to a template that has no indicators on it. When you draw Fibonacci's, that's one of the keys, is I don't want anything on there. So I normally start with about an F6, which is a function 6 key on my keyboard. It gives, and that's for Trade Navigator. That gives me about 6 or 7 months, depending on the monitor you're using. And if you look, what is the biggest directional move closest to the right side of the chart? Well, that's a little bit of a V bottom, and then that's a V top, right? Here, we've got V bottom and V top. Here we have V bottom and V top. I think it's easy to see the last, or easier to see the last one I drew is largest. That's the largest move we've made, right? So we come over here, and if I put my mouse on the Fibonacci support and resistance tool, it's the one on Trade Navigator that has the two blue lines on the outside. If you're using a different program, just ask that, the broker, the support department, how do you find that indicator? If you have a good brokerage firm and a good charting program, any of those should have a couple of Fibonacci tools. This one for sure. There's no question about this one. This is a key tool that any decent package will have. So I'm going to click on it. Now watch what happens. All right? I'm going to start down here, not where I'm supposed to. I'm going to click and just move my mouse out. And you'll notice my pencil is the blue line, 67.47. The 62.33 blue line at the bottom, that's where I started. Now if I move my mouse up, it goes to 69.42. If I move it up more, it goes to 72.67. Right? And if I just let my mouse go, it will snap it there. Now that is not where I want the fibs drawn. I wanted you to see that when I did this, watch guys, I am doing a starting point. So I'm going to start right here at this bottom here, and I'm going to finish at this top. Do you notice that all the red and purple lines are drawing themselves in there? I did nothing with it. They automatically showed themselves up. They're pre-programmed into the software. So what I will do is I'm going to zoom in a little bit just to make it easier for you to see, right? That was the fib move, or the directional move I said would give us the best fib relationship. And Steele was saying that TOS calls it fib retracements, right? Here it's Fibonacci support and resistance, fib retracements, right? We're going to start at the lowest low and we go up to the highest high, and we work off of wicks, right? And I just drag it out. Notice then that each one of these red and blue and purple lines have a dollar amount on the right and what's called a retracement amount on the left. So if we just took this move on Microsoft as an example, my V bottom was here, we made our directional move up, and we came down. And we pulled all the way down, or just about, to this red line. If we look over to the left, you see 0.5. That is a percentage. That tells me whatever the move was for R1, which is range 1, whatever that move was directional in there, up on this big long yellow line from blue line to blue line, support to resistance, whatever that was, we gave half of it up by pulling down into here, 50%. If we went to the purple line, that would be 0.618. If we went to the next red line, it would be 0.764. If we came all the way back down here, it would be 100%. There are percentages of the initial move. I'm going to tell you right now to write these two numbers down, and this is the order of importance of the lines. I already told you the most important line is 0.618. So write it down. The most important support and resistance lines in Fibonacci, number 1 is 0.618. Number 2 is 0.5. So 0.618 and 0.5. Guys, if you could just learn to identify patterns off of those two lines alone, could make a world of difference in your trading. Just off of those components, just off of those points. All right, so what do Fibonacci's tell us? I told you already, a series of support and resistance levels. They represent retracement levels, some of the things we just went through on the chart, but I always like showing it on the chart, and then this becomes more of a reinforcement. All right, so Paula said, using Trade Pro Fire tip, and it's only showing percentage, not amount. It may be a setting, Paula. There may be a setting that has to be changed on that to allow it to show both. They help us predict where stocks near all-time highs and lows might go next. Guys, I picked the all-time high on Apple before it split when it was $650, and I missed the highest high, which was about $750, $80, whatever the number was, but we missed it by about 80 cents. When we're $100 away, we picked an exit point 80 cents away from the highest high. I would say that's a pretty good predictor of being able to utilize an indicator. Fibonacci's work wonderful for predicting, helping to predict stocks' next moves when they're at very high highs or all-time highs and lows. Now, there are different Fibonacci tools to do different jobs, right? You don't go ahead and take a scissor and use it as a knife to cut your steak, right? There's a different tool for a different job. Same with Fibonacci's. The primary one, Fibonacci support and resistance, the retracement tool, that's one will be used most of the time. Now, identification of highly predictable patterns used in conjunction with proper Fibonacci tools gives us a winning combination. So you need the pattern and you need the proper tool, right? You need to be able to identify the pattern and identify the tool that goes with it. And I will show you all of that in Fibonacci Secrets Revealed. Now, there are 3 Fibonacci power tools. You might want to write them down. Fibonacci support and resistance is 1. Number 2 are extensions. This is an ABC pattern. And number 3 are Fibonacci time ratios. How would you like to be able to determine about how long you're going to be in that trade based on Fibonacci numbers? See, now that's what I'm talking about. Give me a price of where it's going and a time period of when it's expected to get there. We use these, if you said order of importance, the way they're written, that would be order of importance to me as well. Now, there are 3 trade setups, guys. The golden ratio retreat is the H pattern. There are a few other rules to that trade setup that you need to be made aware of in order to trade this pattern effectively. The divine proportion wiggle, also known as the zero line breakout trade. I use divine proportion wiggle because David, one of my students that named it, great individual, has turned himself into a phenomenal trader from where he started. And I remember him back at his very first workshop, probably in 2007 or 8. I think my dress shirt that I wore that day is still wet on my shoulder from him crying on it of not knowing what to do, not sure how to proceed and move forward. David is the one that named that trade setup. And there's a thrusting pattern, which is a newer type pattern. And I'll teach you that one as well. So what are you going to learn at Fibonacci Secrets Revealed? How to use Fibonacci's, or how using Fibonacci's may give you an advantage over indicator-based traders. I got to get you away from focusing your primary on indicators and getting you to harmonics. You need to start focusing on what is happening in nature. Human emotion. Guys, when people pull out of trades and they get out, they exit a position with a loss, normally there is a pain threshold that is causing that to happen. That pain threshold has to do with Fibonacci levels. Every bit of it does. And you need to learn to capitalize on that. Using Fibonacci's for stocks that are at their all-time highs and lows so we can learn where they're going to go next. Taking control of your trading with the 3 Fib power tools that I mentioned to you already. And then the 3 trade setups that I'm going to teach you at Fibonacci Secrets Revealed. Plus a couple of bonuses, right? My proprietary Fibonacci settings. I will teach you all the settings and the why behind them. There's one major change that I have made to the settings. I've had Fib traders question me all the time. I've had CMTs, which are certified market technicians, question me saying, your numbers are wrong. No, you don't understand. There's a reason that I've changed a number in there. It's not a primary Fib number, it's a secondary number, but there's a reason that I've changed it in there because my number works better. And how do I know that? Just millions of days of tests to come up with that answer. I don't just change it and say, well, yeah, it sounds good. No, it doesn't work that way. Right? Intraday and end-of-day indicators to use. Right? My trading plan, and so much more, guys. And watch. Guys, Fibonacci Secrets Revealed is coming up Tuesday night, next Tuesday. It's a week from today. September 12th, 9 to 11 p.m. Eastern. If you cannot be there live, it's going to be recorded for you. Guys, I know I've talked to Lisa, and she's told me that so many of you have called the office and said, hey, Rob, please, tell Rob we need to learn more about this. We keep hearing him talking about fibs. He needs to teach this to us. Guys, I have not taught this workshop now in over 4 years. Why? Because I've turned it all into advanced DVD series. I agreed to go back and teach this again. I don't know if I'll ever do it again. right? Because I do have advanced materials that are on this. They're not available right now. They're all being reshot as we speak. But right now, guys, the best way to learn this is to dig in hands-on with me. Not from a DVD. DVDs are great, but you can't ask the DVD a question, right? The best way to do this is to get in hands-on and start asking the questions. Now, excuse me. Paula said, do I use Fibonacci's with futures all the time? All the time. So watch, guys. Let me bring up TradeStation. Right? And I have a chart of Amazon up on the screen. All right? I'm going to maximize this picture here. So let's see. All right, there we go. Now, we might be able to draw on here and keep the lines. It's tough on the intraday stuff with GoToWebinar. It deletes it if there's any movement on the screen. So that's my V top right in there. Right? My V bottom came in right here. Strong V bottom. We made a move up to the purple line, the 0.618 or 61.8. And we violated from there. Right? And we rolled over. We went 1, 2, 3 lines. I am already out of 90% of my trade right there. And my last exit came in right here later in the day. Just an advanced series of indicators to help me get out of that position to determine that it's time to go. All right? So, Joan, through the 764 is one place to start looking, and the negative 618 is the other. All right, so guys, if we look at how this trade panned out, I typed it in so we didn't have, and just forget about what it says at the top of the screen there, day in the life of the trade. That's not, it's not something that we're talking about today. But look at what happened here. Here was the entry of the option price. It was a weekly option, $10.65. It expired this week. I took 4 different exits on the trade. I exited at $11.50, $12, $12.55, and $19.50. This was on, still, this was on Amazon. Oh, did I type in Apple? Sorry, my bad. It's Amazon. Good catch. It is definitely Amazon. Let's change that. It's definitely Amazon. Okay. It on a $10,650 investment, guys. It brought me in $2,010. Call it $2,000 after commission. Right? $2,000. You know, 20%. And we're talking about being in this trade. We're in the trade at 10:10 in the morning, and I finally exited the trade right about 1:30. Right about 1:30 is where I exited the trade. So call it 10 to 1:30, 3.5 hours for 20%. I don't know about you, but I'll take it all day long. And with Fibonacci's, it works amazing. Guys, you use this on, do I have any future stuff open right now? I don't, but let's do this. Let me go ahead and see if I can get a workspace open. Let's go see if there's any movement on the YM tonight. Actually, let's go look at oil. It'll take a couple of seconds to open up. I use a lot of resources. GoToWebinar is an absolute resource hog when it comes to the computer. And TradeStation is no gem, right? It definitely uses a lot as well. So, guys, you're going to receive an email from Mel or from Lisa tonight with the ability to register for the workshop. I just dropped it into the text chat. We're getting pretty close to capacity. Once we hit our number, I am shutting the doors. I am 100% confident, especially after tonight's registration and attendance, that we're going to get real close to filling that up tonight. So I dropped the link into the text chat. Let's see, this is gas. So let's just go look at oil. Oil and gas have been interesting creatures. Very interesting creatures. Right? So let's see. I got a Fibonacci move in there, that move up on oil, but you know, oil was such a run today, there was no way to trade it. The Fib never really pulled. Well, all right, well, let's do this. Watch. So I will grab the Fibonacci's off of, you know, for oil. And it's not the key line that I like it to bounce off of, but it is the hesitation point. We came down. Look how important that line became right in here, right? Again, again, again. It was a major support throughout the day. If we go back and look natural gas today, natural gas was just, it was an inverse relationship to oil. Gas ran down as oil ran up. You guys look, same 236 line, one, all of this whole cluster. Back again, finally we just stayed away from it. Let's see. Francois, I think. I apologize if I said it incorrectly. How do you know it was a fib if it was not traced fully when you got in? No. When I'm looking at this, Frank, over here, that move down came back up to that 236. That it doesn't have to retrace fully. Let me go back to oil, which is where I think you were asking the question on. So this move up, nothing would have happened with it, with this move up to here until after we drew the fibs. So all of that move, there's nothing in there for tradability. When I said before about it wasn't one that was an easy trade, because all of this move today, I don't know if you know anything about oil, but every penny on oil is $10 move. As this thing is moving up, 30, 40, 50, 60 cents, and you're deciding of whether I should get in or not, it's scary at that point. Joan said, when we do the workshop, the Fibonacci Secrets Revealed, will I be showing you how to draw the fibs in TradeStation? I will be showing you both in TradeStation and in Trade Navigator. So if you have a different program that you use, it would just be a matter of taking what I teach you and incorporating it into your charting program. But guys, all I can do is go back to the Amazon trade. That was $2,000 today. And it was $2,000 that it was a set it and forget it. Walk away and it does what it does. All right? Very cool. So guys, I'm going to drop, let's see, I'm going to drop the link back in the chat box again in case you missed it. Joan said, good to know, Trade Navigator, but not TradeStation. Thanks. Oh, well, and Joan, I use both programs, so I'll show it in both. I have TOS set up on a laptop. I do not have it on here, and I wouldn't try to run it with TradeStation on the same system. It'd be too much strain on the resources. But charting program is charting program. It's just learning which one, learning how to use it. Steele, I guarantee if you call them on TOS, they will show you. I haven't gotten to the fib part of it. I'm still playing around with TOS of just how to bring extra windows up and things like that. So, but if you give them a call, I guarantee you they can tell you how to do that. And they're open, 24/7 for tech support, right? But before you call them, make sure you register for Fibonacci Secrets Revealed. So, ladies and gentlemen, it has been an honor. I don't have another class like this scheduled. So if you are wanting to get in at that $99 investment, my suggestion is you get it done tonight. I'm not sure if I'm going to teach another one before the class on Tuesday. I actually head out of town tomorrow, and I'm not back until Sunday. So, and Mondays are always busy for me with everything else that's going on. So, cool. Ladies and gentlemen, it has been awesome being here. You guys were great. Good questions, good participation. I always love it when you do that, when you guys get involved. So have a wonderful evening. God bless. And I'll leave this up for a few minutes so you can grab the link. But you guys have a great night, and I will see you on Tuesday the 12th. Even if you can't be there live, guys, you get it recorded for 30 days. Don't miss out on it. It's your last chance. All right, take care, ladies and gentlemen. Bye now.